Hi everyone, this is Victor at the Fifth Person. At Fifth Person, we invest in great businesses, be it for dividend or capital gain. My job is to help retail investors to do the same so that they can grow their wealth safely and consistently over time. So right now is, how do you know that the company or the stock that you're going to invest is a good buy? So today I'm going to talk about the three most looked at indicator for buying a stock. So let's move on to the first indicator. So the first one we're going to talk about is business fundamental. That's the first indicator. We want to make sure the company we invest in have strong business fundamental. So what does strong business fundamental comprise of? The first thing is we want to look at companies that have very simple and good business. Second, we want to find companies with strong economic mode. So once they have a very strong economic mode, right, they got a very good, or I would say strong defense against their competitor. Next is we want to look for companies with good financial track record. So successful company leave a trail behind. If the company can be successful in the past, there's very high chance that they will continue to maintain the success of the good financial track record moving forward. So we want to buy based on very high probability companies. And lastly, we will look for companies with strong balance sheet. Okay, so we want to buy into companies with very good or strong balance sheet so that during the downtime they can buffer and they can withstand financial crisis, or they won't go into bankruptcy. Okay, so these are the four different things you want to look at under the business fundamentals indicator. So let's move on to the second indicator. So the next indicator that we're going to look at is the growth indicator. Most of the time, right, when share price increase, right, is highly due to the increase in their profit, the growth in the profit. So if you want to make multiple returns in a stock, right, you have to buy into companies that are growing. Okay, how do you know that the company is growing? You can look at a few things. The first thing you can look at is companies that are in the growing sector. And the last thing that you can look at is you look for the possible growth driver that the company have that can help to push up the revenue and profits. Okay, so there you go. That's the second indicator, which is the growth indicator. You look for growing sector and possible growth driver for the company. So let's move on to the third possible indicator that you can look at. So the third indicator that you want to look at is the value. So a good business can be a bad investment if you pay at the wrong price. So for instance, right, if you look at this company called Coca-Cola. If you have bought Coca-Cola in the 1998 peak, right, where their valuation was at the highest, high valuation, it will take you about 18 years, right, in 2016, right, to break even your purchase price in 1998. So if you look at Coca-Cola, Coca-Cola is a good business. But if you pay at the wrong price, right, it takes you only, or not only, take you a long time, 18 years to break even this amount of money that you invest in 1998. Okay, so remember to pay for the right price when you purchase in a growing business. There you go, the three most look at indicator for buying. Okay, so next time when you want to purchase into a stock or a company, please make sure that they fulfill these three indicators before you put your money into them. Okay, I hope you find this video useful. If you know of somebody else who can benefit from this video, please feel free to share with them. And by the way, if you are interested to know or find out more insight on how you can invest successfully in the stock market, then you can go and check out fifthperson.com. Once again, this is Victor Cheng. Thank you for watching, and I'll see you again.